Some traders may be very good in trendline trading. Some others may be good in support and resistance, pivot levels, RSI, volume, EMA, Fibonacci, and other trading strategies. Each of these trading strategies have their own percentage of win ratio. If you can combine some of the trading strategies together, you can increase the probability of a winning trade. Here's an example on how to use trendline, support and resistance, and the pivot levels together to make a successful trade. Let's first take a look at the trendline. Here we can see the market doesn't go anywhere, but it makes some high here, 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 and here. If we connect them together, there's a trend line at the top. But at the same time, we can also draw a trend line at the bottom because there's a 1 point here and then 1 point here. Then we can see clearly that this is a wedge because it is shrinking. For wedge, we're waiting for the breakout. That's the wedge breakout strategy. So we have the wedge shape and then we wait for the breakout, either upside or downside, it doesn't matter. And after it breaks out, we want to wait for the pullback, and then that's the enter point. After that, we can imagine that the breakout will go for at least 3 legs there. So it's a good trading opportunity for both scalping and swing trading. And then go back to this chart, we can see that here is the breakout. Breaking out the bottom trend line, go to downward, and then after the pullback here, the market goes down even further. So you can see this is a huge trend, downward trend. Now let's have a look at the same chart from another angle using the support and resistance. There is a previous day low we can draw here. And then you can see the market behavior is it breaks the previous low level and then pulls back and then go down. So in this trading strategy is purely using the support and resistance breakout. It's similar to the wedge breakout or trendline breakout, but they are also very powerful. Then how do we trade for the support and resistance breakout? It's very similar to the trendline breakout. We wait for the breakout and then wait for the pullback and then trade upon the pullback finishes and then it goes down. And then this depends. The difference between the wedge breakout and the support and resistance breakout is that wedge breakout normally will lead to a strong trend, but it's not necessary for the support and resistance. That's the difference you want to keep in mind. You can simply trade this previous day's low as a support and resistance level for the breakout, and also you can trade the trend line for this wedge breakout. But if you combine both strategy together, you have a higher probability, I would say above 90% of the probability that this trend will go down even further and with a big profit. This will increase your confidence to do the trading. Then how do we enter the trade? You simply wait for the pullback and wait for the signal bar. The reason that we want to wait for the signal bar is because the signal bar first give you a very good timing to enter the market, because the signal bar normally is the start of the trend. Second, the signal bar can give you a very good entry level. So most of the time, you will have a better profit using the signal bar entry. Where is the signal bar of this chart? Here is the pullback with 2 consecutive bull bars here. And then we want to wait for a bear bar as the signal bar. And then this bear bar is a doji-like bar because the body is very small and the tail at the top is larger. So this is a good signal bar to me, and then you can enter the market after this signal bar finishes. If you enter the market, but the market doesn't go immediately to the downside, instead it comes back for a second small pullback here with 2 bull bars here, and then if you are in the position, you want to hold. But if you're not in the position, there's another opportunity to enter the market when the second pullback finishes. Or even when you see the second pullback finishes, you can also add up your position so you can trade more. Then you can see here comes a bear bar. This bear bar with the tail at the bottom, which is larger than the top tail there. So this is not a very good signal bar because the body is leaning toward the upside of the candlestick. Then here comes another bear bar, 2 consecutive bear bars here. The second bear bar here, you can see the body is still in the middle of the candlestick. That doesn't go anywhere. It's not a very good signal bar. However, combining the 2 consecutive bear bars, it means a strong downward trending. So we can enter after this second bear bar finishes. Here you may ask, there is a pullback and then pullback again. If there's another pullback, can I also enter the market? The answer is yes. Normally for a trend, if it goes down, pullback, you can trade up to 3 pullbacks. And then after the third pullback finishes, you can still enter the market. However, it cannot be on to the 4th pullback. If there's a 4th pullback, you can see, my suggestion is that you get out of the market as soon as possible because it's possible there's no downtrend. Right after you enter the market, you should put your initial stop to protect your position. So where is the initial stop? It should be at the top of the first downtrend bear bar, at the top. Though it seems that the stop is very big relatively, but you have to keep the initial stop. And then after the market moves your way, you need to adjust the initial stop to the actual stop, which is the top of this pullback. How can I set my profit target? We can leverage the pivot levels. On the chart, there is also a S1 and also S2. You can use these 2 levels to take your profit. Or you can use other techniques like risk and return ratios, or even trading the measured move. And as I mentioned, that the wedge breakouts can lead to 3 legs. So this is the first leg, pullback, second leg down, pullback, and the third leg. So basically you can wait for the third leg to finish and take your profit if you're swing trading. And also you can notice that on this particular chart, there is a 4th leg here. I don't recommend to trade the 4th leg because the probability is very low. But normally for the 3 legs, you can take a lot of profit already, so you don't have to bother the 4th leg. Another thing you may already notice is that on this chart, if you set S1 as your profit target, it seems that the second leg didn't even touch the S1 here. And then the same thing for S2, it didn't touch S2. So that's why in terms of the using pivot level as the profit target, you may want to exit the market a few pips or a few ticks before it reaches the pivot levels. To sum up here, you can see that to make this trade, we are using trendline, support and resistance, and pivot level together to find out the best entry, stop, as well as the profit target.